Thank you very much, ladies and gentlemen. Just to give you 120 seconds, because time is very limited, I decided to talk very fast today. And I have 3 charts for you, I think, which are worth to take a look on. And if I could get my charts, please. We have seen, if it comes to financial numbers, incredible high valuations of stock market listed companies in the tech field, and also companies who are private and are pre-IPO based. But we have seen a correction in the last year, which was for many companies a very tough setback. If you look at the option programs in North America, Christmas table in North America for tech companies was probably pretty poor to the families because not much money was paid out due to the performance, to the lousy performance in the stock market, even of big tech. And what is more frightening is that we see more IPOs of companies, like in 2000, who are not successful, who IPO and go down 20, 30, 40%, and they stay, and sometimes they disappear. And we have a lot of IPOs coming out of companies who have been highly financed with huge valuations, which are ready to come out on a double-digit, triple-digit billion valuation. And that's the reason why I'm sitting here with my board to talk whether the VC model is broken or not. If we look at the IRAs, the return on capital deployed, Harvard Business School says very transparent, venture capitalists get paid well to lose money. And only a handful of companies on the world make constantly double-digit returns on the fundings they get. Only a very limited number. And I heard a number from angel investments, very exciting. Probably 80% of all angel investment, which is put into companies, is being burned. It never comes back. So for all of you who have invested into a Berlin, London, or New York startup, as an angel investor, it might be very interesting for your CV, but to make money is a different topic. I think it's a fantastic panel to talk about these kind of topics. And due to the time, you see who these gentlemen are. So I will not introduce them and will jump directly into questions. Henning, you have been for 20 years Mr. Aktie of Germany. You have double-digit billions under management today from Berenberg. Actually, it's very interesting to sit next to each other. We have the second oldest bank of Germany.
The world.
One which is
the
world, actually, which is existing. And we have a $1 billion valuation of a fintech startup sitting next to each other. But that's something we can discuss in a second. But Henning, you have been on the capital markets for a long period of time. If you look at the latest development of tech companies, what is your judgment to that? Is it a long-term correction? Is it a market correction? Or are we again in 2000, a remake of 2000, too much venture-funded companies who come to the stock market and we see next year, in 2 years, 3 years, massive correction?
No, I wouldn't be too worried, actually, at the moment. What you see is cycles. Markets have cycles. So the public markets have cycles, which we were seeing in 2000, which we have seen in the financial crisis, and which we probably see now again. Valuations were relatively high at the, let's say, middle of last year. Generally speaking, especially for high-growth companies. They were not extreme. If you look at something like Facebook, Apple, others, you really can say, compared to 2000, these companies have cash flows, they have earnings, good capitalization. It was not extreme. So from that point of view, you cannot say it was a complete bubble. There is no bubble out there. But what you really can say is there's plenty of growth companies which were valued at relatively high levels. That is now deflated and back to, let's call it, more normal levels. What is still concerning is that if you look at traditional sectors, call it chemicals, car industry, relative to high growth sectors, there's still a big differential. And what you really, where I'm wondering how that actually turns out, is that you when you listen to certain valuations in the private market, venture financing and so on, these financing rounds, sometimes you wonder how these numbers add up if you compare them to listed companies, because they are completely different valuations.
Coming back to the chart I showed about the recently IPO'd companies, and I can put it back on the screen, there are a lot of companies. If I press red, it should go back, right? Go back. No, it's got going back. Yeah, let's go back. Okay, we start from the beginning. If you look at these numbers of the recently IPO'd companies, and you see lots of young people globally around the planet, what's your view? Are there too many young companies brought on the stock market which are not sustainable? Or is this just the correction, as you said, rather correction?
Yeah, I mean, normally you have always the same phenomenon. At the end of an equity market cycle, you see a lot of IPOs. And especially companies which, let's say, are loss-making or not having a big profit level at that point of time. So they can go to the market. Sometimes maybe these valuations are too high, and then they get corrected in the next phase. In the long run, it doesn't really matter. If the business model actually develops, if they get their business model successful, if they actually get the market share which is predicted, then this might be actually a great opportunity for private investors to get in. And all of these names, if you look at them, probably all of us are using them, have a great market position, so the future is bright for them. But valuations on capital markets can actually be volatile, and capital markets itself got extremely volatile over the last 1.5 years. Funny enough, we always say it's tech, because we have a lot of technical investors now. We have a lot of quantitative models and so on. So we use tech, and that's creating volatility. And so at the end, you have to expect that these companies on the market are volatile.
Henry, what's your perspective from the American side? I mean, with Business Insider or Insider, you cover a lot of those companies. And is this again a bubble? What is your feeling about that?
No, to echo Henning's, we are in a cycle. This cycle looks nothing like the dot-com bubble. Valuations got a little bit elevated in some of the big stocks. They've come down a little bit. You could even argue that tech is undervalued relative to other segments of the market, because this is where so much of the growth is. That said, 20% down in the S&P is nothing. That is a wimpy correction. If we get to 50, 60% down, call me and say what happened. 20% is just volatility. It's a miracle that we have gone for 9 years without that.
So with the motto we have, optimism and courage, you are an optimist if you look forward.
100% long term, but we are going to have a nasty pull down here where a whole new generation of investors who for the last 9 years have only been taught markets only go up, soon they will learn that sometimes they go down a lot more than they are supposed to and stay down, and you feel like an idiot. But long term, tremendously optimistic.
You would say yes, but clearly yes. Fred, you see it from the venture perspective. What is your valuation? We have these rocket high valuations. On the same time, the liquidity preferences are also increasing a lot. What is your perspective from the Raine Group? How do you see that development?
So I think the analysis we've been speaking about, merely about the public sector in terms of providing a report card to venture, is probably too narrow a scope. And we're living through an era where you also, we have to also remember about mergers and acquisitions. There is an incredible amount of M&A that's been giving liquidity venture capital, which is fantastic. The secondary market, the private secondary market that didn't exist probably 5, 6, 7 years ago to the extent it is now, is providing an enormous amount of liquidity and wealth to venture. And the third is that because companies are going public later, it allows more investors to get in at later stage in the private area that never could have happened before. So there's many different ways as investing to provide liquidity. Okay, we all complain that valuations are too high, right? But a lot of that is because there's been so much wealth created and so much available capital. It's a pure supply and demand issue. And so that may shake out a bit. That might help if you're right. And then valuations will come back to a little bit more normal. And you'll probably see a little less investing this year, waiting for prices to level out a bit.
Fred, we saw today the presentation of Rachel Botsman with transparency drives trust, drives performance. why is the venture capital industry one of the most hated industry if it comes to performance KPIs? And we all talk, every fund today is totally transparent, everything is regulated. If I see, Henning, what you have to provide today, probably we saw today an example this morning, banking is regulation, but the VC industry, there are some people who have total access to the returns, like Harvard, the big spender on the big funds globally, they get all the data. But why is there not an initiative to make that market transparent, to really show that's a great place for investors?
Well, I would argue that it does work, and that if it ain't broke, don't fix it. The companies that have been receiving the capital and investment, I don't think anybody of them are really complaining the amount of capital that's being invested in companies. That's a tremendous amount of opportunities that entrepreneurs have. I think that works. I think that it's a private industry, and doesn't need to be regulated that way because it's working. I would argue that.
I understand your argument from the side of the companies, but from the investor side, I mean, I showed you Harvard Business School, we have the Kaufman study. There's enough proof so far outside that venture capital is a category which is very hard to make money.
Yes.
It is very hard. So I understand your argument from the company side, and most appreciated, Burda is part of that ecosystem. We drive it, we invest, as you say. But why not making that market transparent for the investing side as well?
Again, I think that if you're an LP and you're investing in an event, that's your choice. You have full transparency within the fund that you're investing in, and that's all you need. And so again, it works.
Okay. Valentin, talking about you, you have just made a fantastic capital increase for your company. I think I saw your interview on the Handelsblatt. You're now the unicorn in the financial market, providing an app for banking. Can you just share a few words what you're doing, and especially what you're doing differently to the existing players that you got that high valuation?
So I think what we did different from the beginning on is really strong focus on the customer. So what we have done, what we are actually providing to our customers is very basic. It's a mobile bank account, so it's very easy access to bank account, and it helps our customers to manage their finances easily and save a lot of time. So it's actually a very, very simple product. I think the biggest difference in our model is that we operate on a modern technology. We are, I would say, a digital company more than a traditional bank. And we operate on a completely different cost base. So we use the most modern technology, operate on a completely different cost base. It's maybe a sixth of a traditional bank. And these advantages we can forward to our customers at a better service level. And I think that's what we do different. And then on the side, I would say we do that we're now in 24 markets in Europe. Most of the other banks that are out there are even just in one area, maybe just in Berlin, just in Munich, maybe in 2 countries. But we do everything with one technology base, one product, one brand in 24 markets now. We're going to go to the US in the next couple of months, and then maybe to 5, 6 more markets around the globe. So I think if we have seen the chart with all the IPO companies around the world, I think the time is now for building a brand that is taking care of everyday financial life globally, and that's what we're doing.
And you did your capital increase last year, right, for the fourth quarter? And how did it work out? Did it work easily? Did you have investors queuing, putting money into your company? Did you already feel the stock market having an effect on your financing route? What's your experience?
So, I mean, I think it's always very funny because people invest into our company they're betting on a 10x return. And then they're scared because it's 20% down the market or 20% up. So it's nice, but it actually doesn't correlate. If you invest into N26, you think that the market in retail banking is completely be different in 10 years than it's now. And it doesn't matter if the average of the market is growing 5% every year or minus 5% every year or 2% every year. You just bet that you are going to have the majority of the market share. So that's, on one hand, I think that's what it is. So I think there's tremendous value going to be created by the companies that you had on your slide. So I think they're all undervalued. And then I think the other side of this is obviously it's all market investors that, again, have investors. So you definitely feel that. So you definitely feel...
So did you get more questions? Were the questions more heavily compared to the financing round you did before? Did you get more pressure? Did you had to increase your liquidity, Liquidationspräferenz?
Yeah, so I think for me as an entrepreneur, it's very difficult to compare because you do it for, basically it's my first company that I founded, and the last round that we've raised was 160 million, completely different time, completely different numbers. So for us, I think the funding round that we did now was maybe one of the, I wouldn't say easiest, but it was a good round for us. Yeah? I mean, we got a great valuation. We got very cool investors that joined our investor base. But I would say I think the timing was also good. I think raising now in the first quarter
it's more difficult.
Is definitely more challenging. But what is it? Am I optimizing for good valuation? Obviously, every entrepreneur wants to get a good valuation for the company, but you want to get the best investors. And in the end, it doesn't matter if you get an investment closed, a little bit higher valuation, a little bit lower in valuation. We have never optimized the valuations throughout the rounds. It's about where are you going to stand in 10 years? Are you going to have a company that maybe has 50 million around the world on customers or not? So I think that's only the small steps. And I think today, I think is a very good time to get venture financed. I think there's more capital than ever out there. I think the capital is completely global. So I think, our investors, they came in now based in New York and in Singapore. The investors that we had in the rounds before is Hong Kong, Tel Aviv. So we have investors from all over the world, including Europe. So I think it's a global market, and sometimes I don't understand that people are complaining so much that there's too less capital. I think if you build a great product, I think you can get the capital.
And would you also say you're very well connected to the ecosystem of Berlin? Does that, what you say, only count for your company being so successful, or is this also something which you would say counts for the whole ecosystem of Germany, London, New York, and Silicon Valley?
So I would say that I think it's true for the bigger hubs that you have. So I think everybody who has a venture capital firm around the globe comes to Berlin regularly, comes to London regularly, comes to other markets in Europe regularly, as well as to the big hubs all around the globe. So I think there, especially from a certain stage, the difference is not so difficult of the access to capital. But I would say in the early stages, where you are makes a lot of difference. I think Berlin is definitely earlier stage than London, for example. But I think also with entrepreneurs being more successful, maybe also, some people selling their companies, there's definitely money going into the market. Today, I have more the feeling that we see too less ideas. So
you say too less. Mm-hmm.
Not the ideas, but too less teams. Yeah. So when I discuss with my co-founder or other entrepreneurs or people that work for us, we sometimes also do angel investments from time to time. It's
80% really, write-off?
It's not with ours, hopefully. But I think it's very difficult to find the right teams, and it needs to mature. Yeah, I think when I was at university 10 years ago, at my university, no one talked about startup. So I was the first one actually moving into that direction, maybe, or a couple of people. Now it's more common. So you get more talent, you get the best talent into startup, and that has
the entrepreneurial factor is a limited factor.
Yeah.
It's not the capital factor from your side.
I think so. Yeah.
One final question to you for the first round. You said you go to America. You're planning to go to America. Yeah. Did that have an impact on your financing round? Because America can be a very complex country if it comes to regulation, everyone knows, but it's a huge market. So my question is, what was the reaction from your investors coming around and saying, I am going from Berlin to America?
With the investors that we brought on board, especially Inside Ventures, they have backed a couple of companies coming from Europe, going to the US and being successful. So for them, definitely that is something that they found very attractive. I think if you look at the N26 story, it's more, how do you get to a customer base that is 100 million? And America is the next step for us, but it's not only America. We would like to do 5 to 6 more markets outside of the US later in the next couple of years. So I think America is definitely one thing that you need to do, or you need to try. It's too big not to try, but it's not the only thing where you can be successful.
Okay, thank you. Henning, I know it's very difficult to look forward for 5 years, but there are many very large funds on the planet around who invested in tech in the last 10 years and are getting a bit more careful now because they say because of low interest rates, we had huge gains in the last 10 years. If we look at the stocks we have seen, and there's a discussion going on in in global family offices, let's say very large ones, that we might have a decade where you can only make 3 or 4% instead of 8 to 10% return per year on tech stock. What is your perspective looking forward 5 years?
Oh, that can actually be true. I mean, we saw Henry's chart a little earlier that actually growth rates worldwide are going down, and obviously interest rates are lower. So there's a demographic factor coming as well, and so the question is, how much potential growth do we have? And that was the Asian story yesterday. So there is definitely a change. China was very strong growth driver in the past. It's coming off as well. So we have to expect that overall macroeconomic environment is tougher. And therefore, the revenue potential for a lot of companies is getting tougher. And that would mean at the end of the day that you have to expect lower returns. You cannot expect, let's say, 7, 8% like we had in the past when you see interest rate levels at let's say 0 to 2%. That's just not realistic.
Fred, do you have a perspective from the venture industry? I mean, that question is a question.
Yeah.
You probably will get asked by your investors as well.
All the time.
What is your answer?
I mean, if you look at your chart that you had up earlier, most of the companies and the logos that were there, those were companies that were birthed 10, 15, maybe even 20 years ago. If you look right now and you would ask somebody to cite that those 10 companies are going to have $100 billion plus values, and there aren't that many right now, and it's somewhat cyclical and somewhat long-term supply and demand. So yeah, you might see a different 5-year value expectation right now because we can't cite them. But we could look at all those. They were all born, let's say, between 2000 and 2008.
You also could agree that there could be a period of time there where we see lower returns compared to what we have seen in the last 10 years. That's what you're saying. The chance is there. The risk is there.
The risk is always there. Of course, risk is always there. Absolutely. Absolutely.
Henry, one question about the US. Your president, it is probably very fair to say that your president is not so close to big tech like the former guy.
Today.
Today.
Maybe tomorrow he will love big tech and hug big tech.
Okay. But let's say...
Depends what big tech says about it.
Let's say it that way. And the president, I don't say your president, the president of the United States has been very outspoken on Amazon. Very outspoken. Joseph Symes is now your FTC commissioner. If we see the connection between the Obama administration and Eric Schmidt, who was able to go into the White House almost every night, checking in instantly, without any further clearance before, because he was cleared for every meeting all the time, that is clearly different now. What do you expect from the FTC and from your president if it comes on splitting up big tech? We had Scott Galloway here last year, who made his speech opening 2018 is a year of splitting up big tech. It didn't happen in 2018. So if you look forward, what is your perspective on that?
Let us be clear why the President of the United States has nasty things to say about Amazon, because the owner of Amazon also owns the Washington Post, which reports a lot of what the President describes as fake news. And the President's definition of fake news, apparently, is news that is true that the President doesn't like. Therefore, the President is after Amazon.
But Henry, come on. He's also pushing on Facebook.
The President occasionally makes comments about Facebook when right-wing media alleges that Facebook leans left, when Google... We had a very famous hearing on Capitol Hill recently, and one of the questions was asked, why, when I Google idiot, do pictures of President Trump come up? And Google said, it's the algorithm. And it was. So this is why President Trump is angry. It has nothing to do with antitrust or anything like that. It is all this. But to your more profound point, Google, Amazon, Facebook, several other companies, these are the most powerful media and communications companies in the history of the world. Regulators are finally starting to take a closer look. Regulators will come in. They will try to regulate, starting in Europe and in the US. And my only thought there would be the companies are starting to self-regulate very quickly, Cheryl talked about Facebook under a lot of fire. They are making good moves. Will they get there in time? We will see. But there will be more regulation. As to breaking them up, I would go back to the 1990s. Remember, Microsoft was in exactly the same position. Everybody hated Microsoft. They're too powerful. They control everything. There was a trial. They were found guilty. They were ordered to be broken up. Never happened. So we're talking 10 years at a minimum before anything really
That comes
exciting.
my final question. I agree with you. Final question. I mean, it was just one observation. I saw Sheryl Sandberg's speech in 12, and the whole audience here was clapping. And this time, you felt this speech here, it was very limited reaction. There is a question of trust. And there is a question of, are these big brands we see, the big platforms, an advantage or a disadvantage for society? So my final question I have to you, I see now more and more investors, venture capitalists who say, I do not invest into areas where these big companies are, because if they are there, they dominate the marketplace in a way that I can't make my 10x, as we have heard. Fred, would you...
Oh my God! What a great time to invest in contrarian. The contrarian now, all wide open for opportunity, just because of that. That's what venture capital does.
But why is not a big investment into search globally? There are so many areas. Anyway, time is over. Thank you very much. I love it. Thank you, folks. Thank you very much.